Hello everyone. Monday night US market dropped significantly around 2.5% due to the feud between Trump and Fed chairman. However, yesterday Indian market was saved by RBI and its new measure, which I think it's important to understand to assess the potential banking stocks performance. So in this video, let's look at those first and then we can discuss our regular market report video for today, 23rd April 2025 for the Indian stock market in terms of Nifty and Bank Nifty. In order to understand what RBI did, we need to understand what is LCR. LCR means liquidity coverage ratio. In simple term, LCR means it's a measure that how much worth Indian banks has to held in high quality liquid assets. So in emergency, if people or business start to withdraw means, then banks should have the capacity to support for 30 days without any RBI help. Basically, it's just bank's ability to survive for 30 days. High quality liquid assets means the assets that banks can easily and quickly convert into cash with little or no loss of its value, such as cash reserves, central bank reserves, and government bonds. I mean, for banks, this is the Achilles heel because obviously cash reserve won't earn any money, whereas central bank reserves and government bonds earn less money as interest than what bank has to pay their customer deposit. So in short, the less allocation for LCR is better for banks' earnings, but again more risky. Now in July 2024, then the RBI Governor Shaktikanta Das proposed the guidance that all Indian banks for their online deposit, they have to allocate additional 5% as LCR. For example, at present, the LCR for the stable deposit with internet banking enable is 5%, which Shaktikanta Das requested the bank to increase 10%. Please note, not the official one, but just the proposal that now on Monday evening officially proposed as 7.5%. Just to be clear, present official 5% LCR, but unofficially it's 10%. But in future from April 2026, banks has to maintain 7.5% LCR. I hope everyone able to follow me. Similarly, for less stable internet-enabled deposit, at present LCR 10%, but unofficially it's 15%. In future, it will be 12.5%. Then the major main change comes from the business side. For the non-financial entity like trust or company, at present the LCR or the runoff rate is 100%. From April 2026 onwards, the requirement will be only 40%. Now, as per some analysts, this RBI changes will free up liquidity on the banks up to 3 lakh crore rupees. And banks can lend those 3 lakh crore rupees to other high net interest margin loans. Morgan Stanley said that this RBI move could increase the average Indian bank's credit growth rate by 1 to 2%, and as a result, average Indian bank's profit could increase up to 1 to 4%, which is really massive, and hence the reason yesterday ICICI Bank, HDFC Bank, and Kotak Mahindra Bank all were hitting the new all-time high value, which in turn helped our Indian market to close positive despite the sell-off in US market. So that's it. That's the RBI's new rule change regarding the liquidity coverage ratio and its impact. Coming to the regular stuff, as we discussed earlier, Monday night US market was negative because during weekend Trump was pressurizing Fed chairman to cut the interest rate or he will replace him kind of, which market didn't like since market wants the independent Federal Reserve and not to be influenced by the government, which in turn triggered the dollar sell-off against the major Western countries. So dollar index crashed below to 98. Now last night Trump said he had no intention of firing Fed chairman. So that's the first positive. Then second, US Treasury Secretary Scott Bessent in a JP Morgan organized live event said that in the near future there will be de-escalation in ongoing tariff standoff between US and China, which market took that as very positive and reversed all of its Monday loss and closed slightly more positive. Dow Jones was up by 2.66%, S&P 500 increased 2.51%, and Nasdaq increased 2.71%. In case of VIX, it also reversed its increase, but still at the elevated level around 30. Whereas about the dollar index, it slightly increased, moved closer to 99. Then regarding oil, it increased to 2% as last night US again issued the new sanction against Iran. This time they targeted LPG and shipping corporation. At the time of this video, Brent crude trading around 68 US dollars per barrel and WTI crude trading at 64 US dollars per barrel. Coming to Indian ADR, all the four major Indian stocks in US closed positive of 1.5 to 2%. Even the Reliance GDR closed 3% positive in Europe. As we discussed last week, there is an uncertainty around the dollar premium. So there is a complete misalignment in the arbitrage between India listing and US listing. So accounting all, I think all the four ADRs got the positive arbitrage of around 2%. Then in Reliance GDR, it is around 1%. In line with this positivity, after the Indian market close, yesterday GIFT Nifty increased to near 24,400. However, early morning today it dropped little and traded at 24,315. Equating that with the spot market, for now it's indicating the gap up opening of around 150 points. About institution, yesterday for the fifth session in a row, FI was net buyers. They net bought for 1,300 crore rupees and DI net sold for 900 crore rupees. Then regarding the derivative market analysis, first in the index options, new call option open interest yesterday added 11%, whereas put options was added only 7%. So stance wise, proprietary traders reduced their bullishness. On Monday they held near net 4% of their open interest on the bullish side. That yesterday session end dropped to net 2.7% open interest on the bullish side. Whereas both FII and retail traders holding their open interest on the near neutral side but with slight negative bias. About index future, still FII holding 68% of their open interest on the negative side. On the other hand, both retail traders and proprietary traders holding near neutral position. So overall, combining for the third session in a row, only proprietary traders makes more money if market goes up, others wants the neutral expiry if not negative. Then macro-wise, because of this US tariff war, yesterday IMF cuts the India's GDP growth rate for the present financial year to 6.2% from earlier 6.5%. Second, I don't know about its impact. There was a conflict escalation yesterday in Kashmir. I'm sorry about the incident, but from market perspective, it can influence as well. As a summary, trade tension between China and US is de-escalating. The tension between US President and Fed Chairman also de-escalated yesterday. So US market closed significantly positive. In line with that, GIFT Nifty and Indian ADR all indicating the gap up opening. About the things to look out, early morning before our market opening, Japan's April month PMI data is due. Then during our market hours at 10:30, India's April month PMI data, and in the afternoon, France, Germany, UK and Eurozone PMI data is still released. Finally, in the aftermarket hours at 5:30 p.m., RBI's last monetary policy meeting minutes is due. And for US market, their PMI data, new home sales data, and crude oil inventories are some of the items we need to keep an eye out today. Just for info, last night after US market close, Tesla released their earnings and it was bad, but the stocks already fallen much. So for now, in the aftermarket hours trading, their share price increased 5%. Coming technical, Nifty opened 60 points gap up and after initial volatility, it gained some strength and remained positive throughout the session. But the profit booking trimmed some of its gain, so closed below 24,200. Thus on the daily chart, Nifty formed a small bearish candle with upper and lower shadow, resembling a doji-like candlestick pattern indicating indecisiveness. However, on the positive side, the overall trend remains strong with the continuation of higher high and higher low formation for the 6th straight day. In addition, it also traded well above all key moving averages and remained above the 50% Fibonacci retracement. Furthermore, Nifty traded near the upper line of the Bollinger Band with a strong trend in RSI and MACD momentum indicators. Hence, as long as Nifty holds 24,000 as the support despite consolidation, the immediate hurdle is at 24,200. A move above this level could open the way towards 24,300 to 24,350, followed by 24,550, which is the crucial resistance. In case of Bank Nifty, it opened more than 100 points gap up and was positive throughout the session, then closed at around 55,650. Thus, on the daily chart, Bank Nifty formed a bullish candlestick pattern with an upper shadow indicating pressure at higher level. In addition, it sustained well above all key moving averages and also above the upper line of the Bollinger Band, with RSI and MACD maintaining its positivity. Hence, the support is at 55,300 and any breach below this level could trigger sharp profit booking and could drag the Bank Nifty down towards 54,400. As per the options front, the maximum call option open interest was at 25,000 strike, followed by 24,500 and 24,200, with the maximum new call option writing at 24,400 strike and then 24,200 and 25,000. On the put side, the maximum open interest was at 24,000 strike, followed by 23,500 and 24,100, with the maximum new put option writing at 24,200 strike and then 24,000 and 24,100. Thus, from options data, the key resistance is at 25,000 with support at 24,000 level. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.